And welcome to the Nerdy Agent Podcast. Today, I am your host, Josh Pettersen, but I guess I'll be a commentator too, with my brother and fellow nerd, AJ. We're glad you're here. Today, we're going to talk about Homebuilder confidence. So we'll walk through the recently reported Homebuilder Confidence Index data. We've done a couple pods on this before, but there was some interesting data that came out in August. So we want to give you an overview of that, how it compares to recent months, and what impacts it could have on forward-looking trends. That said, we always start with our Would You Rather. So for this week, because we are taking our team to the Great Minnesota Get Together on Friday, which is the Minnesota State Fair for all of our out-of-state listeners, this week I thought I'd throw AJ a Would You Rather of two new fair food options for the year. So anyone who's not familiar with the Minnesota State Fair, there are some pretty wild things that people think up, mostly things that would clog your arteries, but taste delicious. So this year, my Would You Rather, or this time my Would You Rather is, would you rather eat a cheese curd stuffed pizza pretzel, which is a pizza dough pretzel stuffed with cheese curds and pepperoni, courtesy of Green Mill, or a bacon wrapped waffle dog, which is a hot dog on a Nordic waffle with cheddar cheese and bacon?
The cheese curd stuffed pizza pretzel sounds delicious. I'm going to actually get one of those.
Doesn't it sound really, really good?
So good.
I was looking at that as like every word got better.
It just got better as it went. And
I mean, both sound
pepperoni.
delicious. They're just cheese curd stuffed pizza pretzel.
That's phenomenal.
Yeah. I mean, my body might hurt afterwards, but I think I'm going to try to put one of those down at the fair as well.
That's phenomenal.
Making it an easy one for us. Well, if anyone else has got any fair favorites, let us know, because we are excited to be out there on Friday. I haven't been for a few years.
I go like every year. It's the greatest.
It is pretty awesome. As I mentioned earlier, in the meat, or maybe the dough of this episode, we're going to be talking through the Homebuilder Confidence Index. So why don't we start with an overview of that index that we track? AJ, can you give us just a few words on what the index is, what it covers, why it's important?
Yeah, the National Association of Home Builders Housing Market Index is a monthly published study. So every month we get these reports, tracks how confident home builders feel across a variety of metrics. Things like I saw this week, which maybe we'll get into, consumer traffic. So their agents are telling them how many people are coming through, how it is to get financing on new construction, and then just generally how confident they feel that home building and increasing or decreasing home building is a good idea or a bad idea right now. And then it takes all those metrics and it creates a final input or output number that compares to the previous months to sum up how they're feeling. So it's, again, reported every month. Like to track it closely because home building is a huge input on the supply side of the market, which we've talked about a lot lately. The more homes that are being built, the more supply we have, especially in a market where a lot of homeowners are holding on to their house and not selling them. So
yeah, absolutely. I think we said the middle of this index is a 50, which is neutral confidence. Anything above that is considered net positive. Anything below that is considered net negative. So historically, if you listen back to the old podcast, we had a lot of net positive home builder confidence leading up to 2020. It dropped way down during that 2020 COVID timeframe, and then it came back pretty heavily. But it has been hovering around kind of that midpoint since. So will you give us just a quick overview of the data for last month, how it looked, and really what this means?
Yeah, so it actually was jumping up quite a bit throughout the year because I think when the rates went up, that index really dropped.
We reported on this, I think, in November when it was really bad.
Really like in the 30s,
Yep,
maybe?
high 30s, low 40s, I think.
So it was pretty low when the rates started to increase. And then the builders realized, like all of us did, that the high rates weren't necessarily going to slow down the demand as much as people thought. There wasn't a lot of supply in the market. So the builders got more and more confident that they could build homes and sell them. But last month, it did weaken for the first time this year. So the number dropped to 50, which obviously, again, like Josh said, 50 is the neutral number. So that's just even. It's not great. It's not bad. It's kind of in the middle. But it did fall from the 13-year peak that it was reported in July. So I believe that was for June. It was at 56 when it got reported in July. Numbers just came out in August for July at 50.
Yep.
So it says that the builders were feeling a little bit more confident at those higher rates. But the recent run-up has caused them to, think twice about that for sure. And I think, like I mentioned, the largest driver of this low confidence level that just came out was buyer traffic, as they felt like a lot less buyers were walking through their model homes, their spec homes, and things like that.
And that was down, I think, to 34.
Really low.
Really low. So like you mentioned, 13-month peak. So we were up over the last 13 months. Now, it only got to 56, so it wasn't like they were feeling great because obviously, as we know, interest rates have been putting a damper on everything, specifically in that move-up buyer range, which is where a lot of our new construction ends up. But I think that there's interesting data here, which makes sense in that as the rates now have continued to spike in a way that is surprising to a lot of people, it has maybe put the builders on pause a little bit. What types of comments did you see in the data or as you were reading the report that you found interesting? Why this is happening, why they're feeling this way, or just that you think has a broader overview that would be helpful for us to know?
Yeah, I mean, we've got a few here on our agenda, but I think the two that I think are most important is, like you said, those rising mortgage rates really impact the affordability of these types of properties.
Yep.
And specifically here in Minnesota, building is expensive. I mean, we have a high amount of regulation due to having a day like today where it's 100 degrees and it's going to feel like about 110. And in 6 months, it might be negative 20 degrees outside. So building homes in Minnesota is very difficult from insulation, from materials, all of that. But we also, like everywhere else in the country, have high construction costs because there's just not a lot of workers to do these jobs. So the workers are understanding that they are in very high demand and there are not very many of them, which leads to things becoming more and more expensive. I know there's a lack of buildable lots is one of the things that is putting a little bit of a chill on that home builder sentiment as well. Here in Minnesota, I mean, we still do have some space to move and space to run, I think. So locally, I don't know if that's as big of an issue because we have developments going up kind of all along the third ring suburbs, if you will, on every direction from Minneapolis and St. Paul. But I do think that those mortgage rates and the cost of construction, at least here locally, is making things quite a bit more difficult for builders. Absolutely.
And I did note that it was kind of interesting. One of the women who was asked about this, she was the head of, it was at Alabama, from a building standpoint. She said there was a lack of shortage of distribution transformers. So trivia question, do you know what a distribution transformer is?
My guess is that's what's delivering the electricity to these properties maybe while they're being built.
It's the type of transformer that performs the last voltage transformation in a distribution grid. So it converts the voltage used in the transmission line to one suitable for household and commercial usage, typically down to 240.
Oh, so like the high voltage power comes in, goes to these transformers, and then it makes it so that there's the right amount of power running to the houses. So it's that's probably more of a development issue.
You can't do a development if you don't have a distribution transformer.
Interesting.
So I thought that was interesting too, where it's they may have developments that are on pause where they've flattened it, they've done this, but if they can't get power to it, there's not much you can do.
Fun fact, 2020, I just learned this the other day. In 2020, I realized now, after doing my house project, that when you build a foundation wall, this is kind of on topic with what's going on. When you're building a foundation wall, typically here in Minnesota, you're going to pour it 8 inches thick. That's kind of the builder code. It's naturally how you end up building a wall. So you do your footing, and then you build your foundation wall on top of it at 8 inches. Well, in 2020, with all the logistics issues, there were no 8-inch clips to go into the wall. So a clip goes between each panel. They build a wall with these forms, right? And there are these there's panels for each one of the forms. And in between which one of the forms, they slip down this little, probably 16th to 32nd of an inch metal clip that holds each side of the form together so that when you pour the wall, it doesn't start to bow out, right? Well, they didn't have any 8-inch clips.
How can we not create those? I feel like you and I could make those myself.
I have no idea. But while there was a mass short, so they would, the concrete guys would get them like in certain amounts at a time, and they'd get enough to pour like one house a week, right? And they're like, well, I normally pour 3. So then builders were going, well, what do we do? And what my builder said is a lot of times they were going out and finding 10-inch clips and pouring the walls at 10 inches thick rather than at 8, which increased the concrete by like a few $1,000, but at least keeps the project moving.
Yep.
So there are these issues that are still occurring. Luckily now for foundation walls, we do have 8-inch clips again, and it's not a problem. But distribution transformers, if that's the last chain of development and the first chain in building, you're going to have a situation like you said where
on pause.
You've put all your roads in, you've put all your sewers in, you've put all your water and electric and all this stuff in. Then you bring the electric to this spot and you go, well, I guess we'll just wait till we get the transformer that we can build these houses with. So pretty wild.
It is pretty wild. I also thought it was interesting. So we've talked about the CPI constantly. The declining customer traffic is a reminder, this is a quote, of the larger challenge that shelter inflation is up 7.7% from last year, accounted for 90% of the July CPI index.
That's a CNBC article.
Is that what it is?
Definitely. I read that one.
Either way, I think it's interesting, as builders are getting more nervous, part of it is like, in general with these rates, the shelter inflation is significant. So it is something that, you will see, I think, a continued effort by the Fed or by whoever, if they can do anything to tamp down that inflation on just housing, it's going to be an effort that they're putting in. So that impacts future interest rates, that impacts some of the behaviors we're going to likely see, but it's a little out of the purview of what we were planning on talking about today.
I think what's interesting, and I said this to Gus, my go-to lender yesterday, I wish there was a less broad way to solve some of these problems. So it seems like, the Fed has like a couple of levers that they can pull on. The problem is that some of the levers they're pulling on actually make some things worse while trying to make
you hurt
certain
supply
things
while you're trying to
better.
hurt demand.
Right. So in real estate specifically,
That's what I'm saying,
in other markets, it does help. But here locally, numbers just came out for July, and I believe Minnesota's CPI for July was 1%. So across the country, New York and California, we're trying to fix their problems because they're such a large amount of our overall United States economy.
Yep.
But here in Minnesota, we don't have a problem, right? Like we really don't need you to raise the rates. We're at 1%. We probably need rates to get cut potentially here in Minnesota because our inflation is lower than it actually should be according to what the Fed's looking for. But also within these, smaller segments, they're saying it'd be nice if the government, this is part of this quote, if the government came in and tried to enact some policies to help make things more affordable so that builders could build more homes because we are 1.5 million housing units short.
Yep.
Right? And when the rates keep going up and up and up and the builder confidence goes down and down and down, they build less homes and less stuff starts to happen. So it does become a problem as a part of the policy that they're enacting to try to fix a different problem.
Yep. Yeah, absolutely. And it's it's not micro macro, but it is kind of like a singular spot within the bigger problem. I mean, if they were trying to fix real estate or housing in general from a cost standpoint, just raising overnight rates isn't going to really solve the problem. It's actually going to continue to create a bigger problem for us. So, it will solve the buyer pool to an extent, but the seller component is going to be tricky. In terms of this impacting builder behavior, right? So we're hearing more negative sentiment. Obviously, that should result in some changes to builder moves in the future. Like, what are your thoughts on what this means then? If builders are now more nervous, what's going to happen in the future from that standpoint?
What I've learned in about a decade of being in this business is that fear can do some really wild things. So fear drives many of the decisions that buyers and sellers make, and it does not exclude builders from that conversation either. So and I think that there's a lot of emotions attached to this as well, whether they will admit that or not. Many of these builders operated when everything went to crap back in 2006, 7, 8, and 9. And we don't really see that happening right now, just given the mixed news. Could things go sideways, up, down, whatever? Absolutely. But like you said, shelter prices have been increasing and prices have been going up. But, that fear is going to drive them to say, I'm not going to get stuck, with my pants down this time. It's just not going to happen to me because last time...
Keep your pants on.
Yeah, keep your pants on. Last time, X, Y, and Z happened to me when things went bad, and I'm just not going to allow that stuff to slow me down this time. So I'm going to build less homes because last time... I thought everything was great, and I overbuilt, and then I got stuck with 3 specs or whatever that I couldn't sell, and I lost a bunch of money. So you're going to see that happen across the market. Less homes being built unless someone's signed a purchase agreement to buy it. Like you said, there's been more price reductions, potentially more room to negotiate for buyers and their agents.
Yep.
Potentially more financing incentives to try to solve this problem.
Free
for
basement.
Buyers. Yeah, right. Exactly. Nothing is free. But right, they're going out on a limb and saying, we're going to contribute X, Y, or Z to make this a little bit more attractive for you. And whether that's a temporary buy down, a full buy down, an ARM product with a local lender that's just a much more attractive rate, what have you, right? So they're getting more active in trying to offload the stuff they already have probably. But I think there's going to be a big push towards getting more buyers to sign purchase agreements before we build them the house.
Yeah, and that's probably where those financing things will come in. The biggest builders have been really smart about this, where they'll do mostly 2-1 buy downs, but pretty substantial buy downs on the front end for a lot of the people that are willing to sign purchase agreements. So
Well, and the fear of the buyer is, I don't want to pay that top rate,
Yeah.
right? And they say, fine, we'll give you $20,000, and that will make your rate 2% less expensive the first year and 1% less expensive the second year. And by the third year, you're not really going to care anyway. And hopefully, if prices are in a good spot and the economy's in a good spot, you can refinance with the rates are better.
Right. It's been when I've had buyers looking at new construction during this high rate environment, it's been a very compelling approach, is to be able to get them some lower options there. And for the builders, it's just math, right? So if it's $30,000 in closing costs to buy the rates down, they're comfortable spending that if that gets them a deal done versus having a spec they're sitting on. It is interesting that housing starts. So we talked about this, I think, a few months ago. Housing starts were on the rise again. We were feeling pretty good. And then obviously this has made it a little bit more nerve-wracking. Starts in July were up 3.9% above the June numbers and above July of 2022. So that was a good thing. So we had a 1.45 versus 1.37 in July, but now building permits for July were down significantly from July of 2022.
So you're going to see that starts are lagging into, like, they're going to lag behind most of the time. Even permits will, to be honest, because the largest inputs into these numbers are the national builders. And they, the analysts for the national builders aren't getting together this week and deciding how many houses they're building next week. They're doing, you've been in corporate America before, they're forecasting. They're saying in 6 months, we want to do this many. In 12 months, we want to do this many. Well, the decision they made for July happened back in January. And you're going to see how those months line up from a builder confidence perspective. And when confidence was better in a certain time frame, however long that lag is, you're going to see that number of months pass. You're going to go, oh, wow, the starts are up, right, in July. Well, this is mixed results. The starts were up, but why was the builder confidence down? And it's like, well, they made that decision back when the builder confidence was a little bit better. So I think with the confidence going down this month, you'll see maybe in October, November, and December that starts will start to be less.
Yep.
Right? Because of that analysis and forecasting they're doing.
And I think it's an important point to make, is that this is important for two reasons. One, from a market standpoint, it's somewhat problematic when builder confidence starts to shrink, because that means they're going to tighten their behaviors. And because it is a long lead time to kind of change behavior when it comes to building, when they start seeing this number drop and they tighten, that means that we're probably going to have a continued supply crunch going into the next 3 to 6 months, because they're not going to be building specs like you mentioned, right? So that continues to strain the supply environment that is already very strained within our market, where we've talked about building new is the biggest way for us to get out of a supply shortage. And there's not a lot of indicators here with this index going down that that's going to be fixed.
And so I think some of the issue is there's, you look at incentives. This is how all these businesses are operating, and there's not a massive incentive for them to just overbuild right now. Because the last recession, like I said, they're scared. There's risk. But B, they're better off, especially in a development or in a neighborhood, building homes at a pace that feels good, that makes the prices go up, because then the home owners
feel good,
are happy, right? This is not just them building homes. There's marketing involved in this. There's, if builder A goes out and builds a bunch of super expensive homes and people are buying them, and then all of a sudden they're building too many and they have to cut the prices. Well, now all the buyers that bought back when they were super expensive are going, what the heck? We paid way too much for our house. And it doesn't matter that that's just economically driven. They're just going to look at builder A and say, this is your fault. And so they're trying to do their best to increase base prices, to increase sales prices over time, to make it so there's a smooth line of the, inflation of homes within a specific development.
Yep, absolutely. And I think the second thing that we talk about or think about a lot, especially with new construction, but just in general for our market, right, is how do you find, we talk on this podcast about macro. So what are these macro things happening and how do they impact things? But we also talk about how there's these realities in micro situations. So the advantages that you can find within small pockets of opportunity will help you a lot. So as an agent or as a buyer, right now is kind of an interesting time to be thinking about new construction. If you were considering new construction, this would be one of those times where I'm having the light bulb go off, okay, now the builders are nervous. They probably are already overbuilt a little bit because the buyer activity at those houses has been low for the last month. And they had been feeling more and more confident for the last 13 months. So odds are, at these lead times, they've been building specs, and now they're going, like I have a bit of a potential concern, worry, fear here. Even if it's not necessarily founded, they're afraid based on the numbers we're seeing, which tends to mean that if you're looking for new construction, you can potentially find a deal right now. And I would strongly consider you to maybe get out there and look at it in that capacity.
And you got to realize they all operate off of very similar margins, right? The national builders are probably slightly tighter than maybe a custom home builder is.
Yep.
But like a Lennar, they're probably operating off of a 12 to 15% net margin. And if you're building a home with them for, let's just say $600,000 and they developed all of the land, you can anticipate that they're making anywhere from like 75 to 90 grand in profit on that property.
Yep.
So there's some fluff in there if you're feeling like they're really pushing you or they're feeling very anxious about building that home, that you can negotiate with them. And there was a time period where that just wasn't happening because the rates were great and it was, if they don't sell it to you, they sell it to somebody else. It doesn't make a dang difference. But now there is some opportunity where you could jump in and maybe negotiate a better price for your client in these certain situations.
Yeah, and we think about trying to figure out when those little pockets of, I call them arbitrage. It's not necessarily arbitrage in this case, but like when is your best time to strike? And the other thing I would say in this case is take a Lennar, for example. Do you know when Lennar's quarterlies end? Right? It's August, it's May, it's February, it's November. So right now we are 10 days away or 9 days away from the end of their quarter. They're going to probably want to pump out some homes in the next quarter, especially since they're nervous about things. They probably haven't seen a great quarter based on the numbers we're seeing if they're a large reporter. So things like that mean, hey, if my buyer is considering negotiating with Lennar, they might say, we'll wrap it up by the end of this week or whatever, if we can get a great deal on this. And you might see some activity because they're trying to get deals done right now.
The stock market is your friend when it comes to any publicly traded company who you're maybe going to deal with someone on a very one-off scenario. Knowing these kinds of things is important. We've talked about that. I mean, we had a deal on our team where they negotiated an incredible price because
I got $90,000 from Lennar one time.
Lennar was just getting close to the end of their quarter.
This was end of year.
End of year. And they were really, really needing more sales to say that their revenue numbers were better.
Yep.
And so they said, fine, we'll do the deal. Like, we're not going to do that with everybody. And in 2 weeks, we're not doing that. But there's a time crunch here. We need to report to all of our shareholders that we have good revenue, so we will sell that house.
Yep. That's exactly right. Anything else today on Builder Confidence?
I don't think so. It's pretty good stuff.
I think that's all we got. Well, we miss Luke, but hopefully we did all right for you today. Feel free to reach out if you need anything. And if not, just remember, be better.